Hello and a very warm welcome to everybody. I am Shrija Agrawal and welcome to another episode of Minter Side. In today's episode, we are really going to talk about what is the road ahead for Jet Airways. It's been more than a week that the airline has really announced that they're not going to fly further. But the real question in all of this really remains that how do you value a distressed airline like Jet Airways? Any kind of resolution process, be it an M&A or be it the IBC or the non-IBC process, will entail a valuation of the distressed airline. To talk really more about how do you value an airline like this in the current scenario, with me is Varun Gupta, who is a country manager for Duff Phelps India. Thank you, Varun. Thank you for talking to us.
Thanks, Shrija.
My first question to you really is that, we have seen this story play out across, globally. Airline industry is prone to bankruptcies. It's not a new story. As somebody who is actually a leader in valuations across the world, can you perhaps tell us or help us demystify how do you value a distressed airline?
Sure. So maybe let me talk a little bit about the industry in general to give you a little bit of background. So it is a tough industry. There's no doubt about that. A significant amount of capital expenditure upfront, and then fairly high fixed costs. Operating costs are very high in this business, which means that unless you get a lot of customer stickiness, it becomes very difficult to make a profit. And that is, I think, the one factor that we've seen play out in India. Why a lot of airlines have gone bankrupt,
Sure.
despite the fact that there is tremendous growth in traffic, and the projected growth is also very high. So as a result, what's happening is that there are a lot of people investing in growing capacity because they want to cater to this growing market. And as they invest in capacity, they also have to ensure that that capacity gets utilized. So that puts a lot of pressure on them to keep pricing at a level that more and more people join the band of flyers.
So pricing is a real killer there.
Pricing is a big issue. And that, I think, has been a big bane for Indian airlines, despite the huge growth margins.
And despite having the lowest airfares in the world.
Yeah, and that is the problem, really.
Yeah.
Because the airfares are so low, you're not able to make profits while operating. Let me give you a comparison. Globally, agreed, it's a tough industry. Oil can be an issue, and all of those things. But oil has been volatile for the last 6-7 years as well. Despite that, the global aviation industry has returned a profit consistently for the last 10 years. In fact, you'd be surprised, but the expectation is that in this year, 2019, the global aviation industry will make profits of $35 billion.
Wow, and there comes the jet story.
Yeah, which if you convert that into Indian rupees, that is about 2.5 lakh crore rupees of profits. And even if you look at just the Asia Pacific Airlines, and the big ones, Singapore, Cathay, the China Airlines, all of them put together, the profitability of just the APAC region for 2019 alone is expected to be about $10 billion, which is another 70,000 crores.
These are big numbers.
These are big
essentially
numbers.
shows that airline is on a positive growth trajectory.
Airlines have been on a positive growth trajectory for the last 10 years or so. I don't know whether it will play out in the future also, because there are some headwinds. It's an industry that gets affected by a lot of factors.
And against that backdrop, Varun, a story like Jet Airways really happens.
Yes.
And now the way forward really for whatever it is evaluation of a distressed airline. Can you sort of throw us some light there?
One of the things that you have to look in a distressed situation is what is the possibility of a turnaround? What are the steps you can do to make sure that the airline can operate at margins that are remunerative? Right, and therefore there has been a history of turnarounds in the airline industry globally as well as in India. If you look at SpiceJet, the airline was almost dead about 10 years ago, maybe 7 years ago, and it has now revived. So there is a possibility of a turnaround, and that is what any investor looks at when they are evaluating a distressed business. They try and figure out what is the best I can do with this business. They always put a higher degree of risk. Typically, when we carry out a valuation of a business, we use what is known as the discounted cash flow approach.
The DCF method.
The DCF method. In that DCF method, we try and get a sense of what the future cash flows will be from this company. And then we discount those future cash flows using a risk or a discount rate, which we believe is kind of commensurate with the risk we are taking. In a distressed company, you use a higher discount rate, because you're not very sure whether you will be able to achieve those those cash flows that you're projecting. One of the most valuable assets for airlines is parking slots, right? their ability to land the aircraft at a certain airport. And those parking slots are available for only another 2.5 months now. If the airline is not revived, those slots will be up for auction. And then I think the airline will have no value at all. So all of these factors have to be looked at by an investor in a distressed company. One other factor that probably an investor will look at is how flexible the lenders are in terms of taking a haircut, right? So what is the value, equity value of a business? Is the total value of the business less the total debt of that business?
True,
right?
yeah.
Now, if the value of the business is below the value of debt, then theoretically, there is no value to equity.
There's no sense.
Right?
Yeah.
Then why would an investor come in?
Yeah.
The only reason an investor will come in if the lenders are willing to bring their value down to a reasonable number.
There's also sort of one comment made in our discussion that we did on Jet Airways was that at best it can be looked as a marketing company. It doesn't really have anything to itself. What it really has is this entire brand equity program for the Jet Privilege. Right. Do you think it can really sort of encash that very well?
To my mind, see, Jet Privilege is probably something that can be evaluated separately. It is not really part of the airline. It is something that, yes, it has a common branding with Jet, and yes, a lot of the miles that are accumulated there are Jet miles, but it is really, to my mind, a separate company, a separate business. One has to look at Jet Airways, the airline, separately, and the fact that it does not own its aircraft is not a big deal. A lot of airlines across the world do not own airlines. I don't think it will be appropriate to call Jet just a marketing company. It is an airline. It is operating like any other aircraft.
Take us through any case study that has happened in the West, because it's not really clear that what really is the objective of the lender right now. Is it to revive money or to revive Jet Airways?
From a lender's perspective, I think it's important for them to
recover their money,
right? That is the end game for them. Now, what they also want to do is to maximize their recovery. And in order to maximize recovery, that is where questions start being asked. Do you invest a little bit of more money, and people will start thinking, am I putting good money after bad?
Yeah.
Or do you think about, okay, if I make this small investment, relatively small investment, I might be able to recover a significantly higher sum later on. So that kind of starts to play out. And that's where you have to have a lot of comfort with the new investor that is coming in. You have to have a lot of comfort with the business plan that the new investor is putting in. And if you have that confidence, then obviously, things can play out and you can end up making.
5-6 concerns for the new buyer to come in for Jet Airways. What would really those be in terms of valuation, in terms of pricing?
I think one is just the industry. The airline industry in India, they're suffering from a couple of things. One, I would say, is very high ATF prices. The tax that the central government as well as state governments impose on ATF in India make it a very expensive fuel compared to the peers with which the Indian airlines compete. There is also the fact that ATF is not part of the GST, which means that people are not able to take set off of the GST that they have paid. Another factor is, there is a lot of congestions at airports, so that perhaps needs to be addressed. That actually adds to the operating cost of airlines. MRO facilities are not easily available in India. They are also subject to relatively high taxes, so that also becomes more expensive. Ground handling is another area where things can improve. So that is from the infrastructure standpoint. But there is also this concern about this pursuit for growth and for market share, resulting in perhaps lack of discipline when it comes to pricing.
Interesting. I want to tell you one thing, that lenders are not in the business to run an airline. So there has to be a professional management that has to come in place. Absolutely. If at all there's an intent to sort of revive Jet Airways. Tell me one thing, that has there been instances in the past when airline has been stripped down into pieces and there has been some revival process there? Can you perhaps throw some light on that?
What I can think of obviously is a lot of cases of consolidation happening. So two airlines which are not doing really well coming together and cost synergies playing out, and therefore the overall cost of operations going down. You benefit from scale, you benefit from the fact that you can have a single management for managing a larger number of planes and a larger number of passengers. That certainly has played out. I am not aware of situations where airlines have been split into parts and whether that has benefited the operational cost of airlines.
What is the correct path ahead for Jet Airways according to you? Is it IBC, non-IBC, or really sort of buyer coming, turning around? What is your sense there?
Yeah, so IBC is a great tool, but I don't know if it works in all sorts of situations. One of the problems with IBC is that you have a limited time frame within which you have to arrive at a resolution. The advantage in today's environment for banks' perspective is that it clearly lays out a framework within which decision making can be kind of passed on to somebody else, and that perhaps is the reason why a lot of banks prefer to go to the IBC. But my feeling is that generally using the IBC, unless it's a specific kind of industry, using the IBC does result in value destruction to some extent, right? If it helps decision making to that extent, yes, it will give you some value at the end of it. But if you can resolve it outside the NCLT process, then perhaps you will recover more value.
Do you think Jet is a good asset? As of now, as we speak.
At the right price, everything is a good asset. So, if people can figure out the right price to pay for it, yes.
Okay, with that note, at the right price, everything is a good asset. So wrap up from our end. Till time, we'll see you next time. Goodbye and good luck. Thank you for watching us.